going to hand over now to our keynote speaker, the Deputy Minister of Finance, Mr. Nhlanhla Nene.
Thank you very much, Program Director, and I wouldn't want to bore you with the details of why I'm late. I want to believe that my apology was well received. That's what I was told, unless there has been a change to that, but I was told that it was well understood. And when I had the previous speaker talking about when you get into a plane, you assume that you're going to get to your destination, but also just forgot to qualify that on time. But ladies and gentlemen, thank you for the opportunity to address you this morning. Let me start by outlining the 2014 budget. In summary, the 2014 budget is about ensuring fiscal sustainability, protecting the social wage, and giving greater emphasis on the goals of our National Development Plan. Those are the three pillars on which we have built our budget this year. Over the medium term, government will ensure a stable business environment by reducing the deficit and to stabilize debt. We want to support economic recovery, which will remain our main focus, with a particular focus on improving the quality of spending and reducing waste. The budget for this year contributes to the National Development's vision of building a capable and efficient state. Capital expenditure is the fastest growing component of non-interest expenditure of our budget this year. Social wage, which includes spending on health, education, social development, continues to grow significantly in real terms. One of the reasons we are growing the social wage is also because amongst the three deficits that we always talk about, which is we assist with the fiscal deficit, we talk about the current account deficit, which fortunately moved in a better direction just yesterday when the numbers were released, but that's temporary. I would want to assume that everybody understands that. But the reason why we're focusing on this debt deficit also, which is the social deficit, which actually is the one that actually has a tendency to perpetrate inequality. So at local government level, funding is provided to strengthen the capacity building programs that will support rural municipalities in particular, in order to address issues of service delivery, which we've all come to be familiar with in a number of instances. Government is making strides in improving value for money and cutting wasteful expenditure. Cost containment issues to limit expenditure on conferences, not this conference, travel and entertainment were implemented late last year, around December. Chief Procurement Officer is building a national system for the purchase of high-value goods and services commonly used across government in order to limit our expenditure in that regard. The fastest expenditure growth will be in the areas of employment creation and social security and local government, housing and community amenities. The Community Works program will expand to every municipality by year 2017. We envisage that a total of 6 million jobs of varying durations will be created, and that the Unemployment Insurance Fund will also be extended to 365 days instead of the previous 238 days. In line with our National Development Plan, government is providing cities with incentives to change the way they plan infrastructure. The improved system will ensure that development leads to a more integrated, compact and efficient cities. In addition to large baseline allocations, further funding is provided to update informal settlements, eradicate bucket system, expand the commuter rail network, and build bulk water infrastructure. In the next few minutes, I'll try and detail the factors which promote business investment and competitiveness, which is what I've been asked to talk about, and discuss what the 2014 budget has done to support these two key areas. Perhaps let's start by mapping out the economic environment in order to be able to understand just to know where we operate. I know you know exactly where you operate. We've spoken about risk, and I know most of you are in businesses where all these things matter to you, so you've been seized with them. Global growth, as we will have noticed, gathered momentum in 2013, led by a recovery in the advanced economies. This recovery is expected to continue into 2014. Unfortunately, growth in our major trading partners, particularly the Eurozone, remains subdued and pedestrian in the list. This weak export demand means that we are unable to capitalize on the depressed or depreciated exchange rate. Import demand, however, has been resilient. As a result, the current account deficit remains slightly elevated, and as I said, that yesterday's figures provided us with a bit of comfort, but you would know that these are the figures that talk to the last quarter of the year, and there's very little activity during that quarter, so it's not a good measure of where we stand. South Africa is among those countries which struggled to reach potential in the year 2013. Real GDP growth was 1.8% that year, rising to 2.7% this year, and again we project 3.5% in 2016. But the numbers that were released show that this year was actually we were at 1.9. Consumer price inflation is expected to breach the 3 to 6% target band, which is higher. Therefore, higher inflation in several core categories continue to put pressure on the purchasing power of households and businesses. We forecast inflation at about 6.2% for 2014, with a weak rand posing further risks. We've just been talking about risk to this outlook. In light of reduced quantitative easing by the US Federal Reserve, our economy will continue to face increased financial and market volatility. Capital flows will continue to favor developed economies, as we have seen, given expectations of higher interest rates and a lower level of risk. We must remain aware of the potential capital outflows and manage this risk through prudent macroeconomic policies. The real economy story, ladies and gentlemen, is a mixed one. While some sectors prospered in 2013, others grew below potential because of the production stoppages caused by strikes and maintenance delays in a number of areas. The real economy story, and ladies and gentlemen, I'm sure many of you did feel the effects and the impact of the recent labor unrest. It did hurt the economy in 2013, and 2014 has also begun on an unsettled note. The government is working with business and labor to resolve these issues. As we know, our Deputy President continues to facilitate discussions between all parties, and this process has somewhat resulted in fewer and shorter and less bruising industrial action. Growth in the mining sector was volatile last year. Similar is the case for manufacturing, which struggled to gain momentum. These sectors have seen significant increases in unit labor costs, and low margins of profitability threaten future investments. The rest of the economy continued to grow in 2013 at a slower pace than during the previous year. Transport and communication sector was affected by slow growth in mining and manufacturing. The finance, insurance, real estate, and business service sector remained a large contributor to our growth during the period. A broader recovery in economy and in business confidence depends largely on improving the operating environment in mining and manufacturing. Mining contracted on average by 0.5% in each of the last 3 years, while manufacturing recorded average rate annual growth of only 1.8% during the period. Then, turning to our improvements in the infrastructure, ladies and gentlemen, having sketched the economic environment, Perhaps we can now begin to look at how the budget aims to support business and address the challenges I've spoken about. The obvious starting point, which I assume is on many of your minds and lips, is infrastructure. Infrastructure and maintenance spending is projected to exceed 847 billion over the next 3 years. These investments will address bottlenecks, promote higher levels of economic growth and job creation, and boost the country's long-term growth potential as it continues to crowd in the private sector. Let me start with energy. I will just touch on a few, ladies and gentlemen. I'm not going to bore you with the rest of them because I'm sure you've read our documents not once, not twice, not 3 times, because they really matter to you. The first unit of our Medupi power station is expected to be completed towards the end of this year, 2 years later than we had anticipated. Contracts for 47 renewable energy projects were concluded in 2012 and 2013, with most already under construction. We know that shale gas and biofuels are on the table as part of our discussions in the energy mix, and we are moving forward in the direction. And once we have concluded those discussions, we will also begin to see some movement in that area. In terms of transport, Transnet has increased its capacity on its coal line. Plans to further expand the coal, iron ore and manganese lines are at an advanced stage of feasibility assessment. The Passenger Rail Agency of South Africa, Busara, refurbished 500 metro rail coaches last year, and a number of other infrastructure investment is also proceeding under the auspices of Busara. Expansion also of the how train operations are also underway. Medium-term capital expenditure by state-owned companies is projected to reach 370 billion. Investment by Eskom, Transnet and Sanral account for about 90% of this number. State-owned companies have improved their spending performance in 2012-13. They spent about 109 billion on infrastructure projects during this period. This amounts to roughly 80% of their budgets. This is a marked improvement from only 70% of their budgets in the previous year. We aim to improve on this outcome as we move forward. Spending on social infrastructure, which includes health, education and community facilities, were indicated that that's the highest growing number in our budget. It's projected to increase from 30 billion in 2012-13 to 43 billion by 2016-17. Priority will be given to programs to eradicate school infrastructure backlogs. A number of initiatives in this area are underway already. We're talking ASIDI programs, we're talking about the education and collaborative initiative between government and business, where we've made tremendous progress. Government employment programs are central to many of the infrastructure projects. The government will launch the 3rd phase of its expanded public works program in April. Over the next 5 years, we aim to create about 6 million jobs, and we are certain that this is within our reach. As envisaged in our National Development Plan, the Community Works Program will become the largest component of expanded public works. Additional resources have been made available to the program to achieve the presence in every municipality, as I said, in 2016-17. There will be an emphasis on harnessing synergies between the different employment programs and improving the quality of work so that participants are better able to graduate into the formal economy. This will also be there will also be a concerted effort to link employment programs with government initiatives to foster small enterprises and collectives. All of this, ladies and gentlemen, all of this seeks to address and to create an enabling environment within which local business can prosper. If we turn to skills development, education determines the productivity of our workers, which in turn affects the competitiveness of our companies. We're mindful of the issues within the education system, and we've taken measures to address these challenges and enhance outcomes within the sector. Department of Basic Education has a new long-term plan to improve the quality of education. To assist the department, funding will be made available through the Schools Infrastructure Backlogs Grant to rebuild 433 schools during this period. The Funza Lushaka bursary schemes scheme is supporting the National Development Plan's requirement for more and better qualified teachers. Around 3,950 graduates qualified in 2013 for placement this year. In 2013-14, 8.7 million learners benefited from our school's nutrition program. The main focus of in 2014 will be on strengthening and monitoring the program to ensure that provision of nutritious meals meets the stipulated criteria. A white paper on post-school education and training released last year also reflects NDP priorities. It envisages a significant increase in the number of students enrolled in higher education. The bursaries and loans made available to students from low-income families through the National Students Financial Aid Scheme are a key enabler in this regard, and an additional 145 million has been made available over the medium term to pilot and initiate a new administration system for this initiative. Support for small and medium-sized enterprises are key drivers of the South African economy. They not only provide a large share of our growth, but they are also an integral part of government's plans to create employment opportunities. Small and medium-sized businesses face several challenges, including access to markets and funding. So the statistics here of 90% of startups failing, and this is an area which we should actually pay particular attention to. Government is considering options to provide tax relief to organizations such as foundations that promote small enterprise development. As a complementary measure, it is proposed that grants received by small and medium-sized enterprises be tax exempt regardless of the source of funds, unless it's the proceeds of crime. When you say to people regardless of the source of funds, you run the risk of being misinterpreted to be saying even if it comes from illegal sources. These businesses are critical for job creation and deserve our support. The venture capital company tax regime is another way government aims to encourage investment into small businesses and junior mining companies. Following consultation with interested parties, government proposes to enhance the effectiveness of the tax incentive to support entrepreneurial development. In July last year, we set up a tax review committee, and we have accepted the committee's recommendations to amend the turnover tax regime to reduce the tax compliance burden of micro enterprises. We are also giving consideration to replacing the graduated tax regime with a refundable tax compliance credit. This would provide tax relief to small business corporations with an annual turnover of less than 20 million rands. Unemployment remains a challenge, ladies and gentlemen. We cannot afford to exclude our greatest asset, the people of South Africa, from the economy. The private sector remains the most important source of employment. Government will help the private sector to create jobs through the employment tax incentive as we have passed it, passed it last year, and it came into effect from the 1st of January this year. And so far, we've recorded 56,000 employment opportunities that have been created directly as a result of this. Now, turning to Africa. Harnessing Africa's growth is also an important area of our focus. We've also not ignored this part of the world, because South Africa is regarded as a gateway into Africa. We would also want to lead into Africa. As South Africans, we cannot sit idle and wait for a recovery in global growth. While wage and consumption growth has stagnated in South Africa's main export destinations, growth in the sub-Saharan Africa is expected to exceed 6% in 2014. Growth on the continent has been especially pronounced in the technology, telecommunications, financial and retail sectors. To help firms take advantage of this growth potential, as the National Treasury, we have proposed a number of things, among others, measures to help local firms in the technology, media, and telecommunications sector to raise capital. We are also proposing reforms to reduce the administrative burden and the cost of doing business for South African firms, investors, and individuals. We're also proposing a revised template for reporting banks' foreign exposure to streamline the investment process. Government is committed to supporting the expansion of South African firms into Africa. As a result, the 2014 budget extends arrangements for South African firms who wish to establish a subsidiary to hold African and offshore operations. As the National Treasury, we are also working with the Department of Trade and Industry to produce an investment policy framework which provides safeguards for companies aiming to invest in Africa. Touching on the plans to deal with structural impediments, South Africa needs to adapt to changes in the global and domestic economy. Slower growth in China has weighed down the prices of some South African key commodity exports. But there's a potential to capitalize on the weak rand and tap into the new export markets, and policy will support this. As you know, exports are a bit slow to actually respond, whilst imports respond immediately. Over the medium term, spending plans aim to address structural impediments, market failures, and coordination challenges. This will help promote the stronger, more inclusive growth on which our National Development Plan depends. A number of those initiatives, including manufacturing development incentives, which are allocated at the moment at 9.7 billion over the next 3 years, and this is in addition to the tax relief offered through other incentive programs. Government has established the Economic Competitiveness Support Package, which was established in 2011, with an allocation of 25 billion over the next 3 years, and it will make 16.3 billion available to businesses to upgrade machinery and increase its their productivity. Over the next 3 years, special economic zones are allocated 2.3 billion to promote value-added exports and generate jobs in economically disadvantaged parts of the country. Preparatory work is underway to attract investors to the zones through tax incentives, infrastructure enhancement, and other incentives. That sounded like a bell. Government is developing an agricultural policy action plan to support the NDP's target of creating 1 million jobs in agriculture and land reform by 2030. Over 7 billion rands will be spent on conditional grants to provinces to support about 430,000 subsistence and 54,500 smallholder farmers, and to improve extension services in order to support emerging farmers. To boost domestic food production and reduce reliance on imports, the program called Nhlanhla aims to bring an additional 1 million hectares into cultivation by 2019, creating 300,000 jobs. Meanwhile, the Comprehensive Agricultural Support Program grant, which receives 1.6 billion per year over the medium term, intends to increase farm output, especially for the beneficiaries of land reform. Improving the quality of public services, as I said, part of what the National Development Plan enjoins us to do is to build a capable public service. Resources, ladies and gentlemen, are limited. This is a constraint faced by every government, and I would hazard to say by everyone. But what we can do is to ensure that the available expenditure is allocated efficiently to priority areas such as education and investment in productive infrastructure. The NDP requires an improvement in the quality of public services within a sustainable fiscal envelope. If resources are wasted or diverted, the impact of public spending is diminished. A series of related initiatives are focusing on these concerns. I'll touch on a few of them. Several spending reviews are underway, conducted jointly by the National Treasury and the Presidency. These reviews aim to provide greater understanding of performance and value for money. Second, similar spending reviews have also been conducted in provincial government and suggest a range of efficiency improvements that can enhance value for money. Over the past 12 months, the Office of the Accountant General has taken steps to strengthen the control environment of government's financial systems. It finalized 27 forensic reports leading to 39 specific allegations. Of these allegations, 13 are under criminal investigation and 13 in court, and 13 referred for internal disciplinary action. The Chief Procurement Officer, as I alluded to earlier, is building a national procurement system for the purchase of high-value goods and services commonly used across government. Reforms will simplify procurement procedures, strengthen accountability, and improve government's ability to detect corruption and maladministration. As I conclude, ladies and gentlemen, it is critical for business in South Africa that government deliver on the National Development Plan's objectives. Priorities for the 2014 budget therefore include, among others, these three: improvement in infrastructure, actions to draw more young people into employment, and improvement in the quality of our services. The NDP advocates a new approach to address policy challenges, whereby partnerships between the public and the private sectors and civil society are expanded. The competitiveness of local businesses is reliant on many factors. The budget aims to support all of these, ranging from high-cost infrastructure projects to the education of students and management of our cities. Your success is our success, ladies and gentlemen. Without a thriving business environment, government would struggle to raise the necessary resources to run an effective state. Effort has been made in the 2014 budget to create an enabling environment, as I've tried to outline, where business is provided with all the tools necessary to succeed, both locally and internationally. And thank you, ladies and gentlemen, for listening to me.